Hi, this is Greg Dorsey. Welcome to Leeb.com, Leeb.com. Today's Wednesday, July 15th. Wow, the markets were on fire today, gaining 3% or so on most averages. Sparking the rally was Intel, which last night, after the closing bell, reported outstanding results. China gets the credit here. 55% of the company's revenue comes from the Asia-Pacific region, ex-Japan, and China makes up a large chunk of that. Contrast that with Dell, who's largely a domestic company and had a lousy quarter. Clearly, China is an important driver in the world economy right now, and will continue to be so for a while. Psychological factors favor the bulls in the stock market here. We could rally back up to the prior highs and maybe even go through that, possibly as high as 1,000 on the S&P. But don't get too excited here. Volume has been very light. We did see a bit of a pickup here, but we want to see much more of a pickup going forward to convince us that this thing's for real. We also want to see the U.S. economy show signs of improvement. Today we had industrial production down, capacity utilizations at its lowest level since, well, on record, at least going back to in the post-World War II period. We had mortgage applications that were up a little. That was kind of encouraging. But the fact of the matter is banks aren't lending. And as a result, home sales are still down. Inflation is certainly a concern. This week we saw the CPI and the PPI come out. Both came in above expectations. And it looks like China is exporting that inflation. When the U.S. economy does start to grow again, you're going to see a rise in demand for materials, and that's going to cause inflation to bump up even more. In the meantime, bond yields are starting to react. They're rising again. They got hit pretty hard today. And rising bond yields, they're going to put a crimp in the recovery. While the stock market's moving up here, we want you to enjoy the rally while it lasts, but don't get complacent. Inflation is still very much a threat, and so to protect yourself, be sure to have a healthy stake in gold and gold stocks. Well, that's it for today. Stop by again soon, and we appreciate it. Be sure to sign up for our free newsletter at Leeb, Leeb.com. Thanks again.